On this edition of Talk Mortgage to Me, I'm with a 20-year mortgage veteran, Christine Wilson with the mortgage firm. Throughout Christine's career, she has helped over 2,000 families obtain financing for their home purchases. And Christine's going to walk us through a scenario that she recently had. And this is a cool scenario because it was with your daughter.
Yep.
You helped your daughter purchase her first home.
Yep.
And inside of that transaction, just like so many transactions, there's a lesson to be learned. So walk us through, where's your daughter in life, and where did she buy her property, and what was the loan program you all chose, but more importantly, the lesson learned by both you, the professional, as well as her, the consumer?
So my daughter's 25. She's lived up in Atlanta for 3 years now, and she's been renting. It's like nails on a chalkboard to a loan originator. But, you know, you have to let your kids do what they want to do for a little while. And then she was about to rent again. And I was like, no, we're not renting. And I said, let's just go and explore some houses. So she's nervous, you know, she's single.
Okay.
She has a boyfriend. So, but she's not married. So
Did they buy the home together?
No.
They didn't.
Just her.
So she bought it on her own. Wow, very cool. What does she do for a living? Without getting into like too many like private details.
She's a recruiter for like a medical company.
Okay. So her income is more than likely a base salary plus commission.
Yes.
And she's been doing it for at least 2 years.
Yes, 2 or 3 years now.
Yep, because that was probably important for her qualifying.
Yes.
If you're going to use commission income, you typically need to have, what, a 2-year average?
2 years. Mm-hmm.
Yep. Okay, so she had that. She had the base.
Yeah.
She had the 2 years of commission. You're able to use the commission income. She's W-2'd. What type of loan did you do for her?
Conventional.
Conventional loan? Okay.
Yeah, 5% down. And what was interesting is, you know, we started around 425, 450. She's up in the Atlanta, Marietta area.
Okay.
And so we started around 425, 450. That was super, she was super nervous about it. But what was really cool is letting her do it on her own. She went and found the house. She went under contract. The inspection came back and it was a disaster.
The inspection was, okay.
It was a disaster. But, you know, as mom and dad, you kind of try to stay out of it a little bit to let her learn a lesson. And then she finally called us because her inspection period was coming up. And the house, it was a mess. We knew it. So we hurried up, we packed up, we drove to Atlanta because we were like, we had to see this house for ourselves. So we go up there, we see the house. It's a disaster.
Oh, gosh.
The driveway wasn't even long enough for my husband's Tahoe to fit into it. I mean, it was like, and it was in a cul-de-sac that was it was horrible.
What type of home are you getting in Marietta, Georgia for $425,000?
Actually, you know what? It's very similar to the Orlando market.
Okay.
You're getting a 4-bedroom, 2-bath home, you know, and around 2,000, 2,500 square feet.
Let me ask you a random question. At 25 years old, is she anticipating having roommates, or is she going to?
Yes, she's anticipating having a roommate, for sure.
Yeah, because I mean, I'm thinking of myself at 47 years old, and I'm thinking, I don't know if I want to take on that size of a mortgage if I don't have someone else helping me pay it.
Can you believe, this is what first-time home buyers are up against, though, is $400,000 houses.
Yeah, I bought my first house for $170,000. I was 2000 and maybe 4, I'm guessing. Yes, and my payment was $1,200 a month. Now, granted, with inflation and with wages being so much higher today, I'm sure there's some kind of adjustment period, but nonetheless, $425,000.
Yeah.
Okay, so she does have a roommate. So you go up there, the home is
a disaster. Get her out of that contract.
Okay, was she able to get out of it cleanly?
Yeah.
Okay.
Mm-hmm. Yeah, and so we get out of the contract, and then I said to her, and then we went and looked all day long for a house. And it was just interesting because as a loan originator, you know, we do our own loans, you know, and it's tough, but I don't go out and look like this. So it was really cool to put myself in her position. And so we went out all day, I think it was all day Saturday, and looked at houses. And it was just lipstick on a pig, as we say in this industry. And I was like, no. And she wasn't excited about any of them. And I said, you know what? We're going to have to bump you up. We're going to have to go to $475.
Wow.
We're going to have to.
You added $50,000 to her pre-approval. I'm assuming she qualified.
Yes, she did.
But for those that don't know, to the consumer tuning into us today, what does $50,000 mean in terms of like monthly payment?
Well, probably about $300.
Yeah.
Because rates are in the 6s. That's about $60 every 10,000.
Yep.
Times 5 is $300. Okay,
so you're telling her, like, look, if you're tired of seeing a bunch of lipstick smeared over these pigs, and you want something that's more move-in ready, we're gonna have to go from $425 to $475. Now that means you're going to have to stomach an extra $300 a month in terms of your monthly payment.
She did not like that.
No.
At all. Like most people, I mean, and we have these conversations with our borrowers too. And so, but she did not. And it actually ended up, and this was the other thing, is that it got her into a way better neighborhood. The neighborhood was just a little bit upper scale, and it was just felt safer. The whole area that she was in was better. And it was just overall just such a much better decision. And with everything else compared to the other house, and rates had gone down just a little bit in the meantime. And so the payment was like, it didn't end up being $300 more. It ended up being like $100 more.
No way. Rates didn't went down that much.
Well, it was that, the taxes, the insurance, and there was no HOA on this property. And so then it just worked out where it was only $100 more.
You know, here's a lesson that I think we all can learn, and we all are anyone looking to buy a house from your daughter's situation, is that yes, $10,000 seems like a lot of money, meaning like if you took 10 grand out of my savings account, I'd probably call the cops. Right? But if you took $60 out of my wallet and you didn't pay me back, I probably would be a little bit sus of you, but I wouldn't like not hang out with you. So I tell this to all home buyers, like 10 grand, although it's a lot of money in your bank account, when it comes to your mortgage payment, you're talking $60 a month. So sometimes just bumping up your purchase price by $10,000, $20,000, or $30,000 gets you into a new neighborhood.
Yes.
It gets you into a home that is going to be cheaper to insure. That's part of your monthly payment.
Yes.
Right? So all of a sudden you may be absorbing $180 a month in extra payment because of the increase in sales price. But what if you're saving $60 in terms of homeowners insurance? So yes, you bumped $180, but really it was $120 after you factored in the savings that you're going to have from an insurance standpoint.
Yep.
Then you have the whole neighborhood aspect. Maybe that neighborhood has better taxes. There's savings there. And then obviously your daughter got lucky because the market moved in her benefit.
Right.
So she was able to not only be able to take on cheaper taxes, cheaper insurance, but she probably saved about $100 a month due to interest rate movement.
Yeah.
Now, you were sharing with me something the other day about this particular situation, which is why I wanted to feature it. What did you learn as a professional? Because, I mean, you've helped over 2,000 people obtain financing, right? You have systems and processes. You're one of the best of the best. You coach others how to be the best of the best. But what lesson did you learn?
I think the lesson I learned, because you put yourself in your kid's position, and and I gave her a lot of access to me. I talked to her at Saturday at 7:00 at night, but I didn't put her through my system, which was interesting. And there was a lot of things that got left out. Like when I meet with clients for the pre-approval call, now I do that on Zoom, and I give them 3 options. I would have given her a 400, a 450, and a 475 in my conversation, and given her those payments. And actually I make my borrowers write down the numbers: purchase price, payment, funds to close. And I make them write it side by side, all 3 options. And then when that happens, the light bulb goes off in the client's mind, like, oh, 400 to 475 is not that big of a difference for the house that I might really like to live in for the next 10 years, maybe not, and not just for the next 3 years. And so because I didn't take her through that, I think she had a lot of fear, she had a lot of pushback. And so the lesson I learned was just take every client, have a great system, and have a system that's set up. And I do have a great system. It's just that I kind of skipped a little bit with her because she was my daughter, but it ended up not being, then it all worked out in the end, but you know what I mean. I learned a good lesson from
Correct. Yeah, I think for any of us that run our own business or we're 100% commission, it's A, you have to have systems, but B, everyone goes through that system, regardless if you're my sister, you're my best friend, you're a past client, or you're brand new to me, because the system's in place for a reason. And yeah, your daughter could have had a different experience, an experience that would have alleviated some of her fears, but you kind of took advantage of the like mother-daughter relationship. And it's kind of like, look, mom knows best. Let me just tell you what to do. However, the young adult, who probably is a little bit independent, had her own fears. So last question regarding this scenario, was she able to negotiate the seller paying any closing costs, or was that on her? That was on her.
Great other lesson. Great question, because we had already gone through underwriting on her last loan. I kind of let it go through, even though we canceled it. I said, okay, just keep on going, just underwrite it. Because she has commission. You know, it always feels good, especially when it's your daughter, to know an underwriter's looked over at the income. And so it came out of underwriting. We had like 2 conditions on it, like insurance and some like simple ones. So when we made an offer on this one, it was a great house and it was priced right. And I said, make it non-contingent, because we were up against, now we were finding ourselves where we didn't want to put an offer on any houses, none of these houses that we wanted. Now there's 5 offers. Of course, you know how it happens. There's 5 offers on this one house because it was not lipstick on a pig. It was a house that people cared for 20 years.
Yeah, it was move-in ready.
It was move-in ready. They had done the right things. They had moved out, painted, did everything to the house. The house was great. And so we waived the financing contingency on it, shortened up all the inspection periods and everything else, and got the offer accepted, even over other offers that were higher.
Yeah, that's a lesson within a lesson, which we don't have time for that today. And maybe we can have you back and we can do that one later down the road. But something that I'll share with any home buyer out there is, in certain pockets, the market is soft or it's softening. However, when you have a home that needs no work, that is move-in ready, you're not the only buyer that's been driving around town looking at all these pigs with lipstick smothered all over them. So when that one pops up, it's you and 5 other people who want it. All of a sudden, the negotiating isn't in the favor of the home buyer. Now it's in the favor of the home seller. At which point, some of the tactics and tricks that we're using right now to get sellers to pay closing costs don't necessarily work.
Yeah.
So for your daughter, she put 5% down, not 20, by the way, and she paid her own closing costs. Right. So out of her pocket was roughly $25,000, $30,000 based on the sales price and what the average closing costs are in the state of Georgia. Chris, if people want to get a hold of you because maybe they have a daughter who's wanting to buy their own house, or maybe they themselves they're like, wait a minute, I sound like her daughter. What's the best way to get a hold of you?
Just call the office or email us. Call the office 321-972-9421, or just Google me.
I love that.
Just Google Christine Wilson at the mortgage firm, because our website comes up. We have over 150 5-star reviews, and you can see our reviews there, and all our contact information is there.
Awesome. Perfect. Thank you, Chris.
I look like Signetti, huh?
Yes.
Sound like him.
I love it.